Welcome to another session in business startup and accounting training. So by the end of the session, you will have a better understanding of the accounting equation and income statement and how it changes with debits and credits. Okay, so our objective is we're going to look at the accounting equation, debits and credits, and then we're also going to look at the balance sheet or the income statement with debits and credit. Now, this is the accounting equation, and in previous YouTube videos we've looked at the accounting equation as it relates to asset is equal to liabilities plus capital or owner's equity. Now, asset by default is a debit account, which we've explained before. So it increases on the debit side and decreases on the credit side. While liability account is a credit account, it increases on the credit side and decreases on the debit side. And capital account is a credit account. It increases on the credit side and decreases on the debit side. Now, why does these accounts behave in this way? If you buy an asset, the asset comes into the business, which increases. Say for example, you buy a car or you buy a building. It comes into the business as an asset. It will increase the asset side, so therefore the asset coming in would be a debit. On the contrary, if you buy it via debt, the liability will also increase, but it will increase on the credit side. Okay, and therefore the owner's equity or capital will also increase on the credit side. So if you buy a house for, let's say, as we mentioned in another example, for 200,000, the asset will increase on the debit side with the 200,000. The liability, if there's a debt on it of 100,000, the liability will increase on the credit side of 100,000, and therefore the capital by default will increase on the credit side of 100,000. So this is how we apply the principle of debits and credits, with the increase on the various sides based on the nature of the account. So asset account always increases on the debit side, liability account always increases on the credit side, and owner's equity or capital account always increases on the credit side. Now let's have a look at the rules all together. So again, as we mentioned before, asset account always increases on the debit side, liabilities account always increases on the credit side, owner's equity or capital account increases on the credit side. Also, revenue account increases on the credit side. This is so fundamental. Revenue account increases on the credit side, which means that if you sell something, the sales is a credit. However, we receive cash for a sale, which increases the asset account, which would be the debit. So sales would be credited, but the asset, if it's sold via cash, will increase for the debit. So that's the main idea. And in terms of the expenses are debit account, and so therefore it increases on the debit side. So when you pay an expense, you debit the expense account and you credit bank or a supplier account based on the nature of the expense. Okay, so that's the main fundamental idea. So if we understand these rules and how these various accounts behave, we should have a good understanding. So as mentioned before, we've looked at the accounting equation and we've stated how debits and credits behave with the accounting equation, and we've looked at the accounting equation and the income statement and how the assets behave in relation to that statement. So if we have a good understanding of this, we should be able to be strong in doing the debits and credits with any particular software. Thank you for listening and subscribe.